Welcome to the weekly Forex recap brought to you by Admiral Markets and myself, Chris Forsick, on these four currency pairs. First of all, be aware though that this video is shown to a global audience, may not be suitable for everyone. Check out admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more info and details on that. Also, be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only, and by continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Let's kick off with the pound USD. This is the 4-hour chart, and we saw a strong rally last week when price actually retracing all the way back to 135 psychological round level. And we obviously see now at the moment that pound is in a bit of a hard decision spot here. Price has definitely rallied strongly, but all in all, of course, has fallen as well very strongly in the weeks before that. So is this going to be a retracement for more downside, or is this going to be a bigger zigzag to retrace a bigger part of that downtrend before we might find finally resistance that brings it back lower again, or maybe even sees a reversal? Who knows? So that's the main question. That's why I have two trend lines on the pound USD 4-hour chart. A resistance trend line and a support trend line here, and basically at this moment price is stuck in that contracting triangle, respecting both sides, and a breakout could be the difference between a bigger upside or a bigger downside. All right, so the one thing though that I'm specifically interested in is a downside break with the target being 130, 129, because that bottom right in here could still be a bouncing spot for upside. We do see the potential for a bigger reversal considering the strong bullish price action. So what I'm doing basically is keeping an eye on this support trend line, and if price pushes with a 4-hour candle below it, we're looking for a small retracement and then trying to take a short there down to the 78.6 fib at 129.50, which could definitely still be a strong support level. A break below these fibs though, these deeper fibs specifically, then I'm more interested in a longer, let's say a more long-term breakout or medium-term breakout, at least down to 125, perhaps even 123. As price goes down to these Fibonacci targets, I would then turn the fib around, not put it to the upside, but to the downside, put it from here to basically here, like this, and basically price will be then, in that case, looking for targets to the downside here, as price has retraced very strongly against this fib, and basically, there we go, basically respecting the 88.6 fib. So the target all the way down here, 123.50, even further perhaps 120, if this is indeed a continuation of the downtrend. All right, so we can see a very deep fib, 88.6 fib. That could be a turning spot, obviously. So if we break the support trend line, the first target would be the 129.50. But if it breaks 129.50 and the 128 support, then price has a lot of space to fall further in this pound dollar downtrend. However, if price respects 129.50, 130, starts to bounce there, or if it bounces strongly here, then there could be a bigger correction going on, and the price might rally up to targets like 137.50 and 140. If I zoom into the 1-hour chart, there we go. We see basically the internal moves within the 4-hour downside here. You see strong momentum. So what I'll be looking for at this moment is to see how price responds to these fibs right in here. If this is a wave 1, 2, 3, 4, 5, then in that case, wave 4 would not go deeper than the 61.8 fib at 133.25. Typically, actually, price stops at the 38.2 fib at 132.50. All right, so from that perspective, let me take this fib off so that I'm not mixing these fibs. So if you then zoom into the hourly, again, you see that 132.50 could be a very good turning spot actually for this wave 4. Now, will it turn? I'm not sure. If it turns, it would break through this trend line. That would be a first indication. If price hits these fibs and turns, that could still be very bearish. But if it doesn't respect basically the 61.8 and pushes through that, then it is not looking as bearish as I expected. And if it does respect it, then this could be wave 5 going down to challenge these targets first of all. All right, and if it does make 5 waves, by the way, that's also another indication that price might fall further after that as well. All right, going back to the webinars, by the way, we have a good lineup scheduled. We have Naked Scalping Part 1 with Netted on Wednesday. Tuesday and Wednesday, we have live trading room webinars. Wednesday, specifically focusing on Fibonacci. And Thursday, Netted and I take a look at intermarket correlations and why they're so key when trading in the Forex and in the financial markets in general. Let's take a look at the Eurodollar now. First of all, before I look at the charts, I want to show you this correlation matrix that's part of the MetaTrader 4 Supreme Edition of Admiral Markets. And when looking at this table, you can see that it's not so correlated with the pound USD at this moment. Little or no correlation. Positions on these symbols would tend to move independently. So typically, of course, they are correlated. At this moment, they're not really moving in tandem as this correlation matrix is showing. There is more correlation with the dollar Swissy, as typical is. Of course, Euro Yen is also low, and some medium on the Aussie, the Kiwi, the dollar CAD, and the dollar Yen. So that's always interesting to keep an eye on that. So the Eurodollar definitely not following the pound, as we can see. And that's basically true. We saw, of course, a huge fall on the pound, a pretty substantial rise. But on the Eurodollar, price is just going sideways, more or less. It did break the support trend line during the Brexit vote, but after that, it has gone flat. It has not moved anywhere. From my perspective, however, price still interesting if it gets higher, like 112.50. I put a fib on here. If it gets up to these resistance fibs, I think that could be still a great turning spot for the Eurodollar, as I've been saying. But in the meantime, price is not getting there and it's just going sideways. If price breaks through support right here at 110 and this level here, 110 and 109, there could be a bigger breakout for downside. In that case, we might see a continuation of already what we've seen here with the downtrend. We have, of course, lower highs and lower lows. So from that perspective, a continuation of the downtrend is not so surprising, and that would be an interesting potential for the Eurodollar. So I'm all in all bearish on the Eurodollar, but it is not happening right now. It is taking its time, and it might take some time still before it does do that. We might, for instance, challenge the top of the downtrend channel before making a bigger downside. On the 4-hour chart, price is looking like this. So I would want to see basically a break of this trend line, for instance. We already saw some breaks of earlier trend lines, but those have not seen some follow through right here, for instance, or right there as well. And those have not seen significant follow through as yet. We do see bearish price action. So a break of the next trend lines could mean a breakout to the downside. For the moment, though, there is a good chance that price might go up to the targets at 112.50 first of all, before making that bigger turnaround. Moving on to the Aussie, basically not so interesting at this point, but we are seeing a slow but sure uptrend on the Aussie. So if it does challenge 75, it would be a bouncing spot, probably 75.50 could be a bouncing spot in continuation up to test 77.75. Otherwise, I don't see much interest in the Aussie. Obviously, at one point, if it breaks this top here, then there is a chance to go up to 80 and 81, and price could make the continuation to the uptrend to the targets at 272 and minus 61.8 target. For the moment, though, price is kind of very slow, but surely pushing up. So a bit of a dip here. Could see price bounce to test this top, and if it breaks that top, go up to those targets. If it doesn't respect those retracement levels, basically, and breaks this support trend line, then this could be a bigger correction. We already saw momentum here. In that case, price could be falling towards the next level at 70.40. Dollar yen, last but not least, showing a very strong bullish candle, and I think that this bullish candle will be a first signal of upside to continue. And I think, considering the strength of this bullish candle, I would expect the resistance at 107 to break this or next week. So from that perspective, I am starting to become bullish on the dollar yen. Obviously, this was a strong downtrend, but price has bounced off the 50 fib and 100 psychological number with a strong bullish weekly candle. So from that perspective, I am expecting a bit of a upside continuation on the dollar yen in the next 2 weeks. From a daily perspective, you can see that price has rallied pretty strongly. We are at a strong resistance spot too. We have a doji here, so a bit of a dip back to one of these fibs before rising up again to these targets could happen. Let's take a look at the 4-hour chart. You see there's a bit of a consolidation period right here. Is that a bull flag, like for instance we had right in here with the green lines? Or is this going to be a bigger consolidation period down to the 38.2 fib? Both are equally possible. So I'm keeping an eye on these two trend lines. A break of this resistance could indicate an immediate follow through to the upside up to 107, after which we could still see a retracement down to 104. The break of support of this triangle could see price head towards this target, or I should say this retracement fib, and perhaps even the deeper retracement fib at 104. Alright, that wraps up the recap. Hope to see you in the webinars, and make sure to take a look at our analysis and content, of course, through admiralmarkets.com. Wish you great trading. Talk to you soon.